The experiment continues. In this episode, I have 2 weeks worth of updates for you. I'll let you know how I got out of margin trouble and how my high-yield ETFs have done over the past 2 weeks. So stay tuned. I'm on the hunt for an infinite stream of dividend income. I'm trying to turn $1,000 of Robinhood's money into $1,000 of my money. And remember, nothing I say today is any kind of financial, investing, tax, or any other type of advice. You have to do your own due diligence for your investments. Let's get started. 2 weeks ago, my account was in trouble. The value had dipped below the $2,000 minimum threshold, and I was on the verge of a margin call. On March 30th, I transferred 1 share of PAAA from my joint account to my individual investing account. This brought my total share count to 46.79, and as of the filming of this video, the value was about $2,400. This additional share, worth about $51, put me over the margin threshold, and I was no longer in jeopardy of a margin call. This is the 3rd time I've had to add shares to the account to get out of margin trouble. You can see the 3 transfers highlighted in green. For each transfer, I've had to make a decision about how much I wanted to move in to get out of margin trouble. I've considered moving a significant amount, say maybe $500 or $1,000, to put this margin issue behind me. I have plenty of shares of PAAA in my joint account that I could transfer over. However, this experiment was built around the idea of what you could do with a small account. So for each of these transfers, in order to rescue the account, I've only moved a share or 2, in keeping with the idea of a small account strategy. In this case, I decided to just move 1 share, and so far, that's proven to be sufficient. My account value is currently about $2,122. And if I scroll down, you can see that my margin status is currently at low risk. I'm 5.3% above the maintenance threshold. So the addition of the 1 share of PAAA, as well as the increasing value of the positions in the portfolio, have pulled me out of the high-risk margin status. When I recorded the last episode, I was confused as to why I was in a margin trouble, even though my account value was a little over $2,000. And a viewer left me a great comment, which I think explains the issue. If we move over to Robinhood Legend and take a look at everything in the account, the important part's at the top. As you can see here, I have 4 positions in cryptocurrencies, and they're all very small. These were all awards that I received from Robinhood at the end of 2025 in one of their marketing campaigns. The value of these 4 positions is about $10, and that $10 is included in the 2122 in my individual account summary. However, cryptocurrencies don't count towards margin. So what I believe is happening is that although I'm given credit for the value of these 4 cryptocurrencies, it doesn't count towards my margin threshold, which is why I was getting the warnings even though I had $1 or 2 more than $2,000. If you remove the value of these 4 cryptocurrencies, I would have been beneath the $2,000 minimum. So now let's take a look and see how the funds have done over the last 2 weeks. Here is a price return chart of my 4 high-yield ETFs. NIVI did the worst over these last 2 weeks, only up about 3%. Chippy was up a great 16.5%. Blocks beat it at 19%, and SPY is up about 6.5%. If we go back a little further out and look at the past month, we see that Chippy's the only one that's up over this period, 6.5%. Blocks and SPY were down, with NIVI down almost 10%. Let's look at total return over this period. 3 of the 4 are positive. Once again, NIVI is lagging behind, down about 2.3%. So outside of NIVI, I'm pretty happy with the performance of the rest of the funds, especially considering this volatile environment. Here's a total return chart comparing NVYY to NVIDIA over the last month. It's not a huge difference, only about 4%. But I think if we look at the price return, we'll see a much worse picture. Over this last month, NVIDIA is up about 2% in price, and NVYY is down almost 10%. Now, I've really got to get rid of this fund. There's been a lot of things going on in my personal life that have kind of been distracting, so I'm going to have to pay more attention and see about getting a replacement for NVYY sooner rather than later. Now for a dividend update. NVYY paid me 23 cents in the last week of March and 21 cents per share the first week of April. And those both represent about a 77% annualized return. Half of the dividends have been reinvested back into SPY, and like I've been doing for the past several weeks, I'm holding off reinvesting anything back into this fund since I want to get out of it. It's paid me far more than my other ETFs, so far $154. However, the share price is suffering, and it's just not sustainable. And while I appreciate the high dividends, this is essentially NAV erosion, and they're just giving me my money back. The BLOX dividends have drifted down along with the share price, and we've crossed under 10 cents per share for the last 2 weeks. This is in keeping with their 36% payout, and is simply a reflection of the share price. These dividends were split up, and everything has been reinvested. We can scroll over and take a look at Chippy. They gave me about 41 cents and then 44 cents per share. I believe this is in that 40% annualized range. The dividends were split up and reinvested. I also received a PAAA dividend in early April, 20 cents per share for $9.35. That was reinvested back into PAAA. Overall, everything's looking a lot better than it did 2 weeks ago, but things are still in the red. This initial $250 put into NIVI is worth $166. $500 that went into some other ETFs that were eventually consolidated back into BLOX is only worth $130. And the $250 that initially went into SNOY have been moved to Chippy is only worth $173. So this part of the portfolio is down about 53%. The SPY position is a little over $200 in value, which is great, putting the total account at about minus 33%. So that's where things stand. Let me know in the comments if you think that my one share of PAAA will be enough, or if I'll be back in margin call territory in the near future. And if you found this video helpful or entertaining, I would certainly appreciate it if you'd like and subscribe. I am not a financial professional, and nothing I've talked about today is financial, investing, or any other kind of advice. Good luck hunting those infinite dividends. Take care.